Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for the pound dollar, the Great British Pound versus the US dollar. The date is February 23rd, 2020. Make sure you click that red subscribe button on the bottom right hand corner of your screen if you want to stay up to date with all of our pound dollar charts and other currency analysis. All right, so this is the daily chart we're looking at, and after many attempts to sell and break below this 28.50 line, prices rejected with a large bullish candle last week. Basically, now we're really affirming the bullish case for the pound. We see this trend that's been kicking up since September really kept getting deflected by there's a long-term descending trend line that comes down, but really price is just kind of sitting. We really think about this really stable support zone. The more times it gets tested and holds, the better the bullish scenario is, and now that is certainly shaping up. So let's go ahead and look. We look at weekly S1 at $1.2858. So if we were to zoom in here, we can see that even if price were to cool out and come back, that would make a good buy for a bullish sentiment. We really need to see a breakthrough of the 30.62 mark, R1. That would push us into this next price zone. So just like we saw the pound yen do that this week with that yen breakout action, we need to see a similar break above, but a break above this 30.62 mark would just lead to more bullish buying action for the pound. So let's go ahead and get a little bit smaller and look at our 4-hour. Okay. So there's our 4-hour, strong bullish 4-hour candles, moving away from that 28.50 mark. And the pound's pretty famous for these really big, tall, arching ups and downs. So next I'd be looking for my next dip to get into the buy. For day trading, I definitely want to use my fast-moving average on the 4 and the 1 hour to tell me how intact my position is and how soon I should think about getting out, etc. So here's our 20. We see price moving above the fast-moving average. A dip, so S1 being 28.58, that means the pivot's right around here at the 29.17 mark, and that would be a good buy. We could see a little bit of a parallel trend channel happening here. Perhaps price will stay on that fast action. So if I apply a parallel channel to a trend in the 4-hour, this really kind of gives me my 1 hour, 15 minute. There we go. Okay, looks like price could potentially not even dip back down, but remain here and continue to move up bullish, with price staying above the 29.40 mark, 29.50. Definite buy, staying above this fast-moving average. When price is above the fast-moving average, it's usually a pretty good buy signal for the short term. Okay. Let's see. So that's our bullish scenario. The bearish scenario is if price broke back down below 29.45 and then 28.67, this 28.50 mark. So S1, that's really, that would be the short term trend turnaround and the long term trend continuation. We look at this multi-week downtrend. Obviously, from that's a downtrend, but as we get closer, we see that price just isn't having it when sellers try to push it below this line. Price, even the weekly fast-moving average price, right, big bullish candle below it. But what we notice is, even though, this bearish candle here last week, the important, significant thing is that price action body closed above this 29.45 mark. So that's pretty significant, because if we clear that out and we see, right, back fall of 2019, price couldn't close above it. Now it's tested it again, and price holding above. So really, that's your kind of turnaround point. You'd want to look if price were to close below this week, below this line, then the bear's back on. But it looks in the short term that this bull trend is going to continue to test. We got kind of a pennant flag chart formation starting to happen now. So that pennant flags are typically bullish. And so we see price bouncing around in here. What price needs to do, this is the weekly, this is the really long term. So what price would need to do is break out above this pennant flag to really go full bull. So first step would be close above the 30.62 mark. Then we'd have next resistance at 32 or $1.32, excuse me, and our next at $1.35. So more than likely this week, price will remain within this flag, this ascending wedge, but the parallels show that in the short term looks like some good bullish action with a stop losses below 28.50. Okay, great. I wish you a very profitable week of trading. Talk soon.